There are many lessons to be learned from this crypto bear market or this crypto winter. And in this video, I want to break down some of those lessons and also talk about when we can expect the bear market to end and finally get back into a crypto rally again. So if you like this type of content, make sure you guys hit the like button down below and subscribe for more content like this. So I want to break down kind of where we've been and where we are now. So in January 2021, not that long ago, okay, the value of the cryptocurrency market reached $1 trillion in January 2021. This was a huge, huge milestone, the fastest asset by many standards to reach this milestone. 10 months later, in November of 2021, the asset class nearly tripled, almost getting to $3 trillion as several tokens and coins reached their all-time high. We hit about 2.9 trillion. However, just 1 month later of that brilliant month in November of 2021, the market cap of crypto dropped to 2.3 trillion, a drop of about 21%. By mid-June 2022, the entire market class had fallen to a market cap of roughly 800 billion, more than a 70% skid from its all-time high. The takeaway, crypto winter is here. The bear market is here, with much of the euphoria around the cryptocurrency market evaporated for now. But it will come back. We're going to come full circle here at the end of the video and talk about that. But what about some of the lessons we've learned so far through this bear market? Well, one of the crucial takeaways I think we can all say from the latest bull run is that exaggerated narratives and the urge for high returns spurred a lot of greed amongst investors. And we all fell victim to this. We've heard it before, right? Bitcoin's going to 100,000 in this cycle. XRP's going to $5 in this cycle. And we all kind of fell into the trap and the narrative during the bull run that things were just going to be great. And we all got blindsided. Now, whether that was because of the contagions inside crypto this year or some of the outside factors, I think it's both playing at the same time. We're back under $1 trillion market cap. We're back here into a crypto winter where prices have depreciated. The strong investors, the strong conviction investors are still here, but many have left. But I do think they will come back, and I think we'll continue to grow this entire industry. But we're going to need some things to happen, because what we found out was the crypto market cap soared as long as the Federal Reserve kept rates near zero, similar to equities. However, as soon as the Federal Reserve telegraphed its intention to raise interest rates, valuations began to crumble. And we've seen this in stocks and in crypto. Now, despite highly stressed market conditions and depressed prices, DeFi protocols like Aave, Compound, and MakerDAO, they remain pretty resilient while maintaining their loan to value. But we did see companies go under. Three Arrows Capital, Voyager, Celsius, FTX. Investors who lent to these protocols were protected, the Aaves, the Compounds, and the MakerDAOs, by smart contracts that automatically forced borrowers to repay their loans. This isn't to say that DeFi protocols are 100% safe, but the risk parameters to protect investors worked as they should, or at least the top lending protocols were pretty resilient during these times. Now, here's a couple things to consider. Nobody has a crystal ball on how long this crypto winter will last. While it's impossible to predict the future, we can glean insights from previous cycles and current developments to guide the next wave of crypto euphoria. Once there's stability in the reverse trajectory of three significant factors that drive asset prices comes to fruition, and those three are growth in the industry, inflation gets under control, and policy, we can expect an upward trajectory. I do think we're going to get insight into regulation in the United States when it comes to cryptocurrency sooner rather than later, after the fallout of Terra Luna, Three Arrows Capital, Celsius, Voyager, and most recently, FTX. It's inevitable that sooner or later there will be a broad-based acceptance of blockchain technology. It's not going anywhere. And this will drive up block space demand and propel the next wave of user adoption. And if we get regulation in place, this will drive a ton of money into crypto because blockchain's not going anywhere. I don't think a lot of people are arguing this. But crypto winters serve as a reminder, an important reminder, that volatility is part of the markets, especially in crypto. Given the enormous vision of the future of Web3, we have to proceed cautiously and understand that volatility will be part of the game. Also, when we invest and diversify our portfolios into crypto, we have to go into it knowing that not every investment we make will be a sound investment. As much as we want to be perfect in this regard, it's just not how speculative assets work. Look back into the dot-com era. It was very similar. But all you needed back then were a few winners. The same thing could be said here for crypto. The aftermath of the dot-com bubble affirmed that innovative organizations and technologies weather storms, but they also go through immense growing pains. The story will be the same with Web3. The story will be the same with crypto. We will survive. We will advance. There will be winners. There will be losers. But that's why we stick to a diversified portfolio and we continue to have conviction in the future of Web3 and blockchain technology. And if and when we hit on a few of those assets down the line, we're going to like where we are. Thank you all so much for tuning in. I appreciate it. Let me know what you guys think about all this down below. Really, really grateful for everybody out there. Make sure you guys smash the like button, share this video. I think it's really an important message and puts some things in perspective. And hopefully this helps. Thanks again, and we'll talk in the next video.